Hello everyone. Welcome to Figure It Out with Rajat. Today we will learn verification of assets and liability. Verification of assets and liability. It is an act of assuring the correctness of value of asset and liability and its title and existence in the organization. In other words, it means that it is a process of verifying the value of the asset and liability, whether it is owned by business or not, or it is in existence in business or not. We will check these things. Objective of verification. It helps to check error and fraud. It helps to know that the asset is properly utilized in organization or not. It helps in knowing proper valuation of asset. It helps in proper recording of accounting information. It also guides management. It makes sure there is a safety of asset. Asset is a very crucial in organization. Many organizations have very large organization. Just imagine what asset SBI have, or if for matter any public sector undertaking have. These assets are very important or a crucial part of organization. It helps in identifying or having a true picture of organization. What principles auditor keeps in mind while doing verification? First, the auditor checks that the asset is in existence of organization or not. Secondly, he also checks that who owns asset. Remember, business and its owner are different persons. So there must be an ownership of organization, not of individual. The asset must be free from charge. Free from charge means that in many times the asset is given as a collateral to bank to obtain loan. Auditor makes sure that there is any charge against an asset or not. If there is a charge, then he has to take complete detail of the loan and loan agreement. He has to also make sure that the assets are duly depreciated, because majority of assets are depreciated. For example, machinery, plant, and there are also intangible assets in which there is amortization. Auditor must make sure that there is a full disclosure of depreciative policy of the organization and the asset of organization. Verification of share capital. Verification of share capital is most important part in verification of liabilities. Auditor have to check the amount of authorized capital with the legal documents of the company. He have to make sure that the application letter and verify it with allotment book. When the shares are issued, then the application letter were received from the client, and when shares are allotted, they were given allotment number. He have to make sure that the shares are allotted as per the organization's policy or the management's direction. He have to ensure himself that the shares are allotted as per Companies Act. He must follow that, must make sure that the organization has given share as per Companies Act 2013. He also needs to check various agreements like underwriting agreement, agreement of brokerage, and compare them with article of association of company. Underwriting agreement is an agreement in which the company tells a person to issue share on his behalf, and if the underwriter fails to subscribe the full capital, then the company underwriter will purchase. It is a means that the company is giving contract to a person to sell its share, to make sure that the issue is fully subscribed. If it is not fully subscribed, then the underwriter will be responsible. Brokerage. Brokerage means the middleman between a company and a shareholder. Brokerage sells and takes commission from both the sides. Compare the share application book with allotment book. He have to make sure that the shares are allotted as per the company's policy, and application book and allotment book must match. He have to match and compare cash book with passbook. Compare share allotment book with register of companies. Register of companies is a register which contains the name of all the shareholders in a company. He have to make sure that if the share are issued to vendor, in case of other than share issued other than the cash, then he have to compare the assets value agreement and the share allotment letter. Check general entry at the time of issue of share with ledger posting. He have to check the dates on which the transactions are happening. If any amount is given to underwriter as a commission, then it must be as per Companies Act. There is a limit by a Companies Act on the maximum amount of commission paid to underwriter and broker. And here we end today's class. Thank you.